Turtle soup is the only strategy you need in today's market conditions. So what you're going to learn in this series? I will teach everything you need to know about turtle soup. Some types, confirmations, entries, of course the execution psychology. Because you may have the best strategy in the world, but if you can't execute it efficiently and effortless, so your strategy is worthless because you will not able to make any profits with it. You have to own an ability to execute it. So this series consists of 3 parts. It's the first part. In this part, I will teach basic understandings, some key points, what you need to know before diving into the types of the turtle soups. And in the second part, I will teach confirmations and type 2 turtle soup. And finally, the third part, I will teach the final confirmations. And the last one, the type 3 turtle soup. So it's the part 1. Now, in this part, you will learn the basics, some basic understandings, first liquidity and limit orders, how limit orders working, introduction to the manipulation, type 1 turtle soup, and of course, I will show the application on charts. Firstly, I want you to know that turtle soup strategy is belong to Linda Raschke. It's not belong to ICT or Romeo. Street Smarts is a book where the Linda Raschke the firstly talked about the turtle soup. So, what's the turtle soup? It's the basically pure price manipulation, nothing else. Turtle soup is manipulation. That's it. Now let's understand the liquidity. Actually, the liquidity is the buy and sell limit orders. You don't need to overcomplicate the liquidity. It's basically the resting orders below and above the current price. Example 4. Look at here. It's the chart. Liquidity is everywhere. Here is the some limit orders, sell limit orders above the current price. It's just example. There could be some other type of the orders. Example for stop orders. It doesn't matter. Over the time, these orders are accumulating. And this creates this kind of heat map. Example 4. Here in the upper prices, more liquidity resting, I mean limit orders. In this part of the price, less liquidity is resting. It's just an example chart. So, where the price hasn't reached, there is a more resting liquidity. Here in this example, price is accumulating in some range, but there is a part where the price hasn't reached yet. Example for the upper part, price never reached this part or this lower part. This part keeps more liquidity. Example 4, let's look at this chart. You can see that market never reached that levels. Here, 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 and here. The price couldn't break above this level. And in lower prices, the price couldn't break or touching these levels. That's why you can say that these levels keeping more liquidity, where the limit orders hasn't executed yet. Now you can see that the one side of this part where the liquidity is resting is taking. This moved to the upside, which took out these relative highs, but the liquidity resting in lower prices hasn't executed yet. So in next picture, these parts where the more liquidity is resting, where the price hasn't reached yet, is finally executed after taking the one side of this part. The last move up which executed all the orders above these prices is called our manipulation move. So what's the manipulation move? Manipulations are the necessary moves which explains the reason why the price wants to moving from one place to other place. If there is not any manipulation, then this kind of market conditions are low probable, or maybe the market will be less volatile. You have to see the last manipulation for your entry. The manipulations give the conviction in all of your entries. Basically, the turtle soup is kind of manipulation, nothing else. Where the most orders lifting, this side got manipulated, and then market reverses to opposite side. Now let's look at the turtle soup type 1. Before diving, we need to understand the rate of highs, rate of lows, and also the equal highs, equal lows. So look at here. Example for these highs, it's not equal, but they are relative to each other. And also these lows, they are not equal, but they are relative. The second one hasn't taken the first one. Maybe there could be more highs than lows, which they are relative to each other. Or highs and lows could be equal to each other. What it means? It means actually these upper prices keeps more liquidity, which the orders, where the orders accumulating over time hasn't executed yet. And also the lower prices keeps more liquidity where the orders hasn't executed yet. It's the same for the equal highs and equal lows. Now, in type 1 turtle soup, we wait for manipulation of one side. Example 4, in the first one, the move came and took out this rate of highs. You can see this move took out this rate of highs, and then rapidly reversed from these prices until taking out these lows. In the second one, the first move up executed all the orders resting above these prices, and then rapidly reversed to the downside and took out the orders resting below the current price. It's the vice versa. It's for the long positions. The first the market came and executed orders, and then rapidly reversed to the upside. In the second scenario, you see all this equal or relative lows. It doesn't matter. The lows could be equal or relative to each other. This scenario is for the long position. We will take the long here and here. I will teach the confirmations in the next part of the series. Now let's continue to our study on the charts. Now we're looking at the NQ 5-minute chart. Look at here. You see these lows are relative to each other. I mean, the second low hasn't took the first low here. So what it means? It means the below these prices, they are liquidity which accumulating over time. While the time passes, more orders are accumulating here, which act as a magnet, where the price starts to chasing these lows. So the last move which took out these lows called our manipulation move here, and then price immediately reversed and closed above these lows, and then start pushing the higher prices. It's one of the example for the long position. The same scenario here. You can see these lows, each of them are relative to each other. The first, second and third low, which means in lower prices, as the time passes, more orders are accumulating and waiting to be executed. And after that, our manipulation move executes all the limit orders and stop orders, and then starts to immediately react to the upper prices. Now look at here. You can see these highs, all of them are relative to each other. If we will draw a straight line like that, you can see these highs never take each other. This move up is called our manipulation move, and then after that price starts to pushing the lower prices. it's for the short position. Right over here, these highs are equal highs. The last move up is our manipulation move, this right over here. And then market immediately reacts to downside and then pushing around 300 points to lower prices. You can see the both examples. The first one is for the long position and the second one is for the short position. These lows right over here is relative lows, and the highs here is the relative highs. So the market firstly took out these relative lows and then immediately came and took out these highs where the orders resting. You can take the short position after the reaction. Here I will teach the confirmations in other parts of the series. These examples on the chart are just basics. In next parts I will explain the other types of tutorial soups, entry confirmations, and candle range theory. See you next one. Be safe.